Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Thursday, August 22nd, 2013. Thank you all for tuning in. Let's jump right into the charts here. We're going to start off with the usual S&P 500 E-mini futures. You're going to see that the futures really move sharply higher beginning around 2 o'clock in the morning. Just a big thrust. It looks like there was some economic data that was released out of China last night. China had a little bit better than expected PMI, flash PMI. Also, the European markets are roaring and soaring today off of their PMIs as well. So it looks like that is the catalyst for the markets getting a bid this morning. Really coming out of Europe, really coming out of a little bit out of Asia as well. You have these flash PMIs readings that are showing expansion. The one place in Europe that is not showing expansion is in France, where they're still posting a 49.7. So either way, I'm not sure how they calculate this stuff, but either way, that is really moving the markets this morning. These PMI numbers that are coming out are helping the major stock indexes, also helping the S&P 500 to get a bid. But the markets have been very volatile as of late, and we'll have to see exactly where they close today, and expect some early morning volatility. Volume will once again get light as the afternoon approaches. But here's the problem with the markets, if we are to find one. It's bond yields. This morning, bond yields are now at 2.93% and rising. So bond yields at a new 52-week high, 10-year note, now at 2.923%. So we're above that 2.9 threshold. We'll see if the markets can sustain themselves up here. But any way you slice it or dice it, I think that could throw a monkey wrench into today's plan. So you want to sit tight, be prepared. There's going to be a lot of activity coming out of these markets. Like I said earlier, the European markets are all flying higher. German DAX is up by 1%. French CAC 40 is up by 1%. The Milan market is even higher than that, trading at around 1.7%, along with Spain, which is also up 1.7%. But in the U.S., I think you have to watch a 10-year bond yield that can throw a monkey wrench in everything out there. We also want to watch some stocks today that are getting shellacked. One is Abercrombie & Fitch. I'm going to have some gap play support levels for this one. But look at Abercrombie & Fitch today. Stock is actually getting taken to the woodshed here. Closed yesterday at around $46.80. Today it's trading at $38. Hewlett Packard reported earnings as well. The stock is getting hit. Also, I'll have some gap levels for that one as well. So again, gap levels will be posted up in the chat room at around 9 a.m. this morning. So you're going to want to watch for that. But right now, Abercrombie & Fitch and Hewlett Packard, two major movers to the downside. Let's take a look back at the futures real quickly, because it looks like weekly jobless claims are out. They don't seem to be moving the market very much at all, so we're not going to make much out of it. It looks like claims came in at 336,000 for the week ending August 17th. So right now we're not going to make too much out of it. They jumped 13,000, but really that's pretty much in line. I don't think it's going to have much of an effect on the markets going forward. But nonetheless, claims did come in at 336,000. Today will be the start of the Jackson Hole powwow with all of the central bankers from around the world. So you're going to have a lot of Fed speak going on. You'll also have central bankers from around the world. Ben Bernanke is not attending this Jackson Hole event. So every year, right before Labor Day, all the Fed heads and all of the central bankers get together in Jackson Hole, Wyoming. But Ben Bernanke will not be there this year. So we'll see what comes out of there. I'm not sure it's going to be any big market-moving event. But nonetheless, the Jackson Hole event begins today. So we'll see how that plays out, if there's any news coming out of there that can move stocks, move markets around the world, and so forth. I don't think they're going to try to say too much, especially with the new Fed chairman coming into power probably in January. So we'll see how that all shakes out. Let's take a look at gold this morning. Gold is trading at the moment flat on the session. If we take a look at the GLD, you'll notice that it's sitting right here at 132.23. And again, gold is really just going sideways right now. It has been for the last 4 sessions. So nothing wrong with gold, but just going sideways. Stronger dollar, which we do have today. The U.S. dollar index is higher by 40 cents. The dollar is a bit stronger. That could weigh on gold a little bit, but nonetheless, the GLD is holding firm, and spot gold is flat, which is a little bit surprising considering the move up in the dollar. Looking at oil this morning, we take a look at light sweet crude. What we'll notice is that light sweet crude is trading basically, just higher by 20 cents. We'll take a look at the USO, which is a good proxy there. And that's trading really right at 37.20, closed at 37.17. So not a big move today in the oil market, so at least for light sweet crude. So we'll just take it one step at a time. Brent crude is basically flat this morning as well. So again, if there's any relief or any calming in the Middle East, I think oil could be due to pull back. But you do have that premium built in there in the oil prices with all that conflict taking place in the Middle East. And I can't remember a time when conflict hasn't really taken place in the Middle East. But either way we slice it or dice it, futures have started to move higher a little bit. We will have some economic news today, I believe. Out a little bit later, I think we're going to have at 9 a.m. the FHFA House Price Index. That'll be out at 9 o'clock in the morning. And then at 11 o'clock this morning, you're going to have the Kansas City Fed's monthly manufacturing survey, and that's at 11 o'clock this morning. So I don't think either one of those reports are going to be big market movers. I think right now the market's going to focus on two things. Stronger dollar is positive now because of the yen carry trade, and then it's going to follow also the bond yield market. And if bonds start to pull back, that would be beneficial for the stock market. But right now, bonds are trading above the 2.9% threshold, potentially going to 3%. So let's see if that happens, but that could stall out these markets today. But other than that, I don't see very many negatives out here. There's a lot of earnings plays. I'll have a lot more for you in the morning gaps. But again, those will be posted in the chat room at 9 a.m. With that said, everybody, I'd like to leave it there. Short and sweet today. Have a great trading day, and we'll see you on the charts.